So, a question that comes up often, is it possible to make £1 million tax free as a personal financial trader? My objective in this training is to open people's eyes up to what is possible. Is it just fantasy, or can you make this an actual reality? Now, I was a financial advisor for over 20 years, and one of the things that I would do for my clients is work with them to create a financial plan so that they had a retirement date in mind when they would eventually be able to stop working and live off the income and the money that they'd saved up over the years. But they had a plan, they had an idea, they had a track to run on, so they knew what they needed to put away each month. Now, if they didn't have a plan, how could they know how much to save each month or what to actually invest into? Now, the financial regulators would, as financial advisors, they would let us use projections of 7% investment growth, but with charges such as the fund managers' fees, because we used to put them into investment funds, and other charges, this could actually reduce the return to just like 4.9% per year compounded. So we were projecting into the future as to how much their pot of money would be worth if they saved into it on a monthly basis, or be able to put capital sums in. And we used to put money into things like pensions and ISAs, and before that it was personal equity plans and TESAs, but now it's just ISAs that people save into, or pension plans. That's just the normal regulatory route. The thing is, as traders, we have the opportunity to generate far greater returns each month. Now, that's because we can leverage our money. That's something that you can't do when you're just investing into shares through a pension or an ISA. And if we look at how much investment managers can make, if they did over, say, 20% per annum compounded, they would be considered as the special ones. I'm going to do another video and I will show you really the kind of returns that fund managers do get. And some of them are managing billions, but they are restricted as to what they can invest into depending on what their investment mandate is with the regulators. As I said, with trading we can use leverage to magnify our returns, but the downside is that we can also magnify those losses, which is why we have to be careful when selecting the trades that we take. So let's get into it. Let's look at the question of whether it's possible to make £1 million in, say, 10 years' time, just starting with, say, a £10,000 trading account. And as I said, is this reality or just fantasy? So let's get into it. This tool here, this is the magic number compound interest calculator for traders, and as a trader myself I've built this for traders along with these other tools at the top here. So I've built all things that support how I trade. I'm a numbers man. I like certainty to understand exactly where I'll be in the future. I'm always setting goals, and then I get into the real detail as to how much I need to put onto each trade and work out all those calculations to get to where I'm trying to get to. So let's put in the number here, so 10,000. Okay, now we're not going to put any monthly contributions in. So in here we can just put in, say, 2% return. So if that was over a period of 10 years, not taking any withdrawals at all, we can see that 10,000 would be worth 107,651.63, and that would be in 10 years time, so not $1 million. Okay, so here's a nice graph which just shows you how money takes off, and you can see as you're getting towards the 10-year period, this really starts to take off, and then the longer you leave it, the more that this would be worth. So if we said that this was over a period of, let's put in, say, 240 months, so 20 years. If you grew that same £10,000 by just 2% per month, okay, from now, then your final account balance would be worth 1,158,000. Okay, so 20 years, but just at a modest 2% per month compounded. And what we have here, I've built this monthly breakdown here as well, so you can see every month it's showing how much you need to make on your trading account. So let's just say you get to month 12 and your 10,000 at 2% compounded per month is up to 12,433. So for that month you need to make £248.67 with that trading balance, and that's what the account would be worth at the end of the month. And then it's calculating that the following month you're going to need to make £253 and so on. Okay. And then it goes on to month 24, then 36 months, 48 months, 60 months, 72. So you can see here in detail as to how the account is growing, and eventually we get to that magic 20-year period where you've got an 895,000 account in the 228th month. That's what you would need to make for the month at 2%, 2% of that number there. So if you did that, then you'd have 913,000, and then the following month if you made 18,275, then that's what you would have, 1,136,000. okay, but that'd be 20 years. So let's see if we could do this much sooner. So what we're going to do is we're going to put in the required return from 10,000. okay, we're going to type in here 1,000,000. okay, so final account balance 1,000,000. And now what we're going to do, if you said, okay, what about over 20 years, you can see here you would need 1.937%, which we looked at. Now what about if we looked at 10 years, so that's 120 months. Okay, so there's 1,000,000, there's your initial contribution, £10,000 in your trading account to start with. So what this is saying is your required monthly return would need to be 3.912% per month compounded. Okay, and again here's the breakdown, what you would need to make every single month, 3.912%. So what we're doing is looking out to the horizon into the future, so we can see how quickly our money would grow by if we increase that monthly return. So in 10 years time you could then achieve that magic number of 1,000,000. Now of course we can see here that as your accounts got bigger you're putting on far more per trade, and for say in the 60th month you'd have 96,000, and therefore you'd be looking to make £3,764, which is this 3.912%. okay, of that balance. So every month it's exactly the same monthly return required. This is what gives you the track to run on. Now it could be that you think, I'm doing pretty well, I'm consistently profitable, and I think, yeah, I can achieve 3.912% per month consistently. Okay, some months it could be more, some months it could be less. And this calculator, what it does is every month, depending on what the balance is, you can change that starting number. So let's just say that you did make 6% in a month, much higher than what you needed to. That would be out, you just put it into the calculator, so that would be 10,600 at the start of the next month, and then you can see what that return would need to be. So this does all of the calculations for you. So this is the start of your actual financial plan. We talk, or you hear everywhere, you should have a trading plan, but nobody actually really tells you how to break down all the numbers. Okay, so what we're doing in this case is I'm showing big picture stuff. I want you to really see what is possible if you set your mind to it. So I want you to see that it is possible to make 1,000,000, and we're only saying here with a 10,000 trading account to start with. Now 3.912 is what you would need every month, but what about So let's just move this to, so that's 10 years. Right, let's move this to, we'll go down to 5 years, okay? So 5 years now. Oops, just move that along. So again, final account balance $1 million. What would you need to make every month? This is now calculated. So with my little sliders that I built, you can literally just change any of these inputs on the left hand side and it will tell you on the right hand side what you would need to make. So in 5 years you could achieve $1 million with that same 10,000, but you would need just under 8% a month. Okay, and we can see in there in the monthly breakdown, I've even got a little yearly summary in there as well. Now I love graphs. As you can see here in month 12, it hardly moves at all, and then eventually it just starts to take off, and this is the compounding effect. This is why Albert Einstein said that compound interest is the eighth wonder of the world. It is incredible if you do the hard work in the earlier period of time and then just keep generating the same fixed monthly return, and it's regularity of achieving that same return that delivers the incredible results. And of course we do need time on our side, so you know, we can see if we really wanted to go for that 7.978% a month, you may or may not think that's achievable depending on how well you are doing at trading, but this is showing you that if you did get that and kept compounding the account up every month, then yes, it's not a fantasy. You could achieve $1 million in 5 years' time. Now, of course, we know that each month the monthly returns could be different. One month you might make 5%, another month you might make 8%, and so on. And so that is variable in that respect, but what you do need is a target to aim for, and this is what it does for you. It gives you far more certainty. It gives you your GPS, so you have a starting place and you have a destination, okay? And this does all of those calculations for you. So the next thing we're going to look at is, so going back to when I was a financial advisor, I used to always be saying to clients, look, if you do have disposable income, the more that you can put away each month, the more you're going to be able to grow that money if you get some pretty decent investment returns. Even 5, 6, 7% growth a year on the monthly contributions will all add up because of the compounding effect of it. Okay, so what I'm going to do is I'm just going to put in, say if you had an additional £500 that you could put into your trading account each month, how could that help you to compound this up over a 5-year period? Let's just say you're just starting trading, you only had £2,000 to trade with, and you wanted to get to $1 million in 5 years' time. Let's just change that to 500. Okay. So same target amount there. I'm not going to take any withdrawals, so this is the other thing in here. Now you can take withdrawals from this, and I'm going to show you that in another video, but that's very powerful because again it's a little bit like people are saving money up in a pension. When can I start taking withdrawals from this where it won't affect the pension pot, what we call pension drawdown? But I just want to focus in this video on how you can start really getting some insight as to what is possible. This is calculated that you would need an 8.252% return. You've made contributions of 32,000, so that's the 30 that you've put in plus those additional 2. You really would have to go some to try and get to that number, but let's just have a look at 120 months, so over a 10-year period. Can you see there, if you paid £500 a month on top of the 2,000 that you started with, okay, your required monthly return would only be 3.461. Okay, now I will do some training on how to build up a very nice sizable account by stock trading the 500 a month. Okay, so it doesn't mean you're not going to be day trading this, or you could day trade it, but we want to see if you bought into some really decent shares and you've got the power of leverage when you're trading. So if you're trading shares like Nvidia or Apple or Tesla or some really good trending shares, you'll be buying at lower prices each month. And if they grew by an average of 3.461% a month, okay, overall, who knows, you could actually achieve that target, because you're leaving your money just to keep compounding over a 10-year period. So effectively you're buying at different prices, what we call pound cost averaging or dollar cost averaging if you're in America, or euro cost averaging if you're in Europe. So it doesn't really matter what currency you're in, it's just like going to compound up the same, but you're buying into individual stocks at different prices every month. And then overall, at the end of the 10 years, if they averaged a compounded return of 3.461%, then you could end up having, in this case, 990,000 would be your final account balance. And if it's in the Spreadbet account in the UK, with all of this that you're saving in monthly, it is completely tax-free. Okay, so that is incredible, because normally, unless you're putting money into an ISA where you do get some tax-free growth, other than that, your money would be subject to capital gains tax, other than the annual allowance that you're entitled to. So 62,000 contribution, if you made 928,000, it says interest in terms of the returns on your trading account, you would expect to pay a lot of tax on that. But in a Spreadbet account, you wouldn't pay any tax on that. So that potentially is over a couple of £100,000 in tax that's saved. All right, so it gets even better. So you can start seeing now how you can really, over a longer period of time, look ahead onto the horizon, look for your North Star. What does that look like? Where do you want to be in the future? And this makes it far more achievable, because you can see the real numbers, and with the calculator you can put in any numbers that you want. And as I say here, £2,500 a month every single month over a period of 10 years. The numbers don't lie. You can see here exactly what those contributions are. It's telling you exactly what you need to make each month and what the end balance is, and then it's saying, okay, the end balance after month one is 2586. To get 3.461%, you'd need to make £89.51. Okay, so this is the starting balance the following month. So then you need to make 106. End of that month, the start of month 3, then that's how much you need to make. And so not only are you growing the account, but you're adding an additional 500 to it. Okay, and then again gets to, even in month 96, you're up to 414,000. So these numbers can be quite incredible. And again, that's why Albert Einstein said compound interest is the 8th wonder of the world. And it's true. You can really grow a very small amount into something quite considerable in the future. All right. So I'm just going to go back now and just change these numbers again, so we can see if you started with 10,000. I'll tell you what, I'm going to put in 100,000. Okay, so if you needed 100,000 from 10,000 in 10 years, you'd need to make 1.937%. Okay, so that's in 10 years. If we were going to look at, so we don't just use the sliders, we can just type the number in there as well. So if you wanted to get to 100,000 in 5 years, say, you need to make 3.912. Okay, what about 36 months? Okay, so 6.605. What about 24 months? What would you need to achieve there? So you'd need to make 10.069% a month, every month, compounded, constantly adding to the trading balance each month and doing that same number. Okay, that's what you would need to make per month, compounded, 10.069%. Now let's have a look at, say, 36 months. Okay, So 36 months, you need to make 6.605% per month. What about a million? Ooh, so a million over 3 years, you need to make 13.678% per month, every single month, compounded. So there you go. 100,000, a million. Okay, so that's the difference. So 13.64 you'd need to make on them to get to a million, and for 100,000 over the same 3-year period, you need to make 6.605. Okay, so let's just go back to the million again. We'll change this number to, you see why I love numbers? I just love numbers, always have. That's why I was a financial advisor for so many years. I do all sorts of financial modelling and statistical analysis, and that's why I created the Trader's Edge formula, which is here. So that's me, and the Trader's Edge formula that I created is RPT times TPM times R times WR win rate. So not quite Einstein stuff here, but this is the formula I use with the calculators that I have, and that all equals your monthly return, so that it gives you the mathematical edge to also transform your trading psychology. So that all of this really helps. That's me there. So I'm a coach and creator of the Trader's Edge formula. As you can see there, 25 years as a financial advisor, 15 years actively as a trader, and most traders fail not because of bad entries or exits, because of a mathematical oversight in how they manage risk. So we want to remove the guesswork from position sizing, we want to predict drawdowns before they happen, and really, very importantly, we want to transform your emotional trading decisions so it's more of a calculated precision trading that you're doing, and get that clear path to trading account growth. And this can work in any particular market. So it is a mathematical formula so that you can predict your monthly profits. Okay, now I'm just going to give you a glimpse of some of the other calculators. So this is the big picture stuff, and then what I also have done is created these other trading calculators. So you've noticed I'm not even going into charts, and which I've done tons of training, different strategies, which I've got guides for, videos for, but I'm not talking about any of that stuff. I'm talking about what it is that you're trying to achieve as a trader. So this is a risk management calculator I built, where now once we know that big picture stuff, then we can start going into the trade account size. So if we go back to the magic number, and you said, okay, now let's just say a million in 10 years. So it's whatever you feel is possible is what you would put in. You need to make 3.879% return. So what we would do is we would go in here and we would put in 3.879%, which is what you need to hit that amazing target of a million. We would literally just type that in here. Okay, but here's our monthly target, and let's just say you're going to trade 20 days in a month. Okay, so you're going to have there's 20 trading days in a month, and let's say you're going to do on average 3 trades per day. So you can see at the top here, that's 30 trades per month. So we're going to do 20 trading days. There we are. So we're doing 60 trades in a month on average. When we're looking at your risk per trade, so let's just say you're risking 0.5% of this account, so 10,000. Okay. Now you should really know what your average risk reward ratio is. So every trade that you enter, you put your stop loss in, you know where the entry price is, and then you've got like a take profit target, so your TP. And let's just say on average you're hitting like 1.8 return for every pound that you put on, you're making £1.80. Okay, so what this does is once you've put in these inputs on the left hand side, now this took me so long to build. I love this so much. It took God knows how many, lots of coding, and but anyway, I'm not going to get into that. But I built this initially for myself and also for traders, because I think everybody really does need this, because if you really want to know how much you need to make, this just gives you, this is your trading plan. Okay, this is your trading plan with all the numbers, all the bells and whistles. So whatever we change on the left hand side changes here. So we know that a monthly target is 387. We know that from that magic number compound interest calculator. So 3.87. That means we need to make £387 for the month. I then like to always break everything down. What do we need to make for the month? What do we need to make for the week? So we need to make £96.75 a week, 5 days in a week. We need to make £19.35 a day. So how much on average is that a trade? 3 trades. So 3 trades a day. So we need to make £6.45 on average per trade. Can you see, by the yard it's hard, by the inch it's a cinch. By the yard it's hard, by the inch it's a cinch. We can see by breaking these numbers down, it's a cinch to make them. But when we are like completely confused in our minds as to what we're gonna, you enter a trade, how long do I hold on to that trade for? Should I take the money now? You don't even need to think, because you know what you need to do. So in terms of the position sizing, if you're risking that 0.5%, which we put in on the left hand side, see there, risk per trade 0.5%, you can risk £50. And then if we're looking for an average risk reward of 1.8, then your reward would be £90. Now look at the magic here. So what this is telling you is, if you did 60 trades per month, 24 winning trades is all that you need to make. So you could have 36 losing trades and 24 winning ones at a risk reward ratio of 1.8. Okay, so you would need a win rate of 40.3. Now, doesn't that take the heat off a little bit psychologically? So it's not overwhelming, is it? Because you think if you get 3 trades wrong, that's 36 of the 60 that you're allowed to get wrong, assuming that you stick to the numbers. You cannot risk any more than 50, which is why I created this position sizing calculator. Okay, so you can't hide from anything with this, because if you follow the methodology here, you cannot risk more than that amount. Otherwise you skew all the numbers. So you have to follow this. This is the formula. Okay, so we're after predictability and consistency. I do have a trading journal in here as well, and it does those calculations for you, so you can put in what symbol pair, whether you're trading forex or indices, and we just put in the numbers here. So that what this journal does is it calculates how many trades that you've done, and then what your average risk reward is, and then the expected profit factor. Okay, I'll get into all of this another day, but I just wanted to give you a glimpse of how I do this, to go from the big picture stuff, the magic number calculator, and then we zoom into what you need to make a month, what you need to make a week, daily per trade, and then what your win rate needs to look like to achieve your targets. And of course you can change with the sliders here. This is all perfect as well. I built this so it's like financial modeling. So what you can do is, if you're a stock trader and you only wanted to trade, say, 1 trade a day, okay, let's just say you wanted to do that and you wanted to trade for 10 days, okay, so that means you only do 10 trades and you need to get 6 winning trades out of 10, okay, but because you might be holding on to the trades longer, because stock trading you've got a different strategy, which I teach, than day trading. Say if it's a 3-to-1, okay, you'd need to get 4 out of 10 trades, winning ones at a 3-to-1. Okay, so that might suit you better. Exactly the same in terms of how much you risk per trade, but your return is greater because you're stock trading, perhaps holding on to those trades. So if you see, say, a setup on Apple or Nvidia or Tesla or whatever it is, your take profit level might be 3 times the stop loss. Okay, 3 times the risk. The reward is 3 times the risk that you're taking. That could change there. But let's just go back to 20 trading days. So you've got like 60 there. If you were getting a risk reward ratio of 3 to 1, look at that, you'd only need 17 out of 60, which would be great. Now some months you might get like a 3 to 1 return, and other months you might get like 1.5 on the trade, but it's all about the average that you're getting, which we put in here. So let's go back to 1.9. So if you've got a 1.9, then you would only need 38.9. What about on average 2.3? You'd only need a 34.2% win rate, so 21 out of 60 winning rate. So whatever you put in here changes everything on this right hand side, and then we've got more analysis, just pretty charts here, just to again emphasize what you need to do. Now what if you decided, oh, I don't want to risk more than 0.5, let's just risk 0.3%. Okay, so if you risk 0.3, because the risk reward ratio is 2.3 to 1, you still would only need 22 out of 60 trades to be successful. Again, this is working on the 3.87. Okay, and then what I also get into with the guys that I coach is, okay, if you're trading, if you're trying to pass a challenge to get a proprietary account, you do that by breaking these numbers down, and they become so achievable, and nothing's rushed, nothing's sporadic, nothing's haphazard, there's no hope trading, there's no strategy hopping, everything just has much greater certainty. And we also even look at, I built a drawdown calculator as well. So we want to look at what would happen if you had a number of consecutive losing trades. I'm not going to get into that now, but I just want to show you what else I've created. I've also got the trading strategy analyzer. Again, you can put in a different set of numbers in here, and this gives you the trading statistics, win rates, monthly returns, a breakdown of everything here as well. Another version of the compound interest calculator, but this is more about analyzing the trades that you've done. And then we've got the risk analysis, we've got the Monte Carlo scenarios in here as well, suggestions about what the current strategy expectancy is, and some of those advanced metrics as well. So we're looking at the Monte Carlo scenario, we look at 20,000 trades and what the expected consecutive losses would be, and the probability of 50% drawdown. This is based on the strategy that you'd be using. So in this case, it's like what would happen if you did a 2% per trade, which it's shown that could be quite disastrous if you've got consecutive trades in a row wrong. We've got the Sharpe ratios in there as well, which traders don't really talk about much, but something that obviously as a financial advisor we all about Sharpe ratios and just tons of different financial metrics, etc. So if you're asking why am I a financial trading educator, mentor, coach, it's because I've been doing this for a bloody long time. So in every financial arena that you could think of, just traded through crashes, invested through crashes. I was involved in the dot-com boom and what was happening then, so that's me there. Anyway, go back to the magic number calculator. So it starts there, big picture stuff. What's the big plan? Where are we trying to get to? Then once we know that, we need to track to run on. What's the GPS? So now we're breaking it down into the smaller numbers, to the monthly, the weekly, the daily targets, and then what we need to make per trade. Then we're working out from the magic number, this is what we need to make. Then we start to work on those numbers to get us to our destination. So all these tools are here to help you. And I also built in the tutorials with each of the calculators, just showing what they all mean, the risk parameters, etc. So what you need to do there. So that's all in here, and I've got guides and that go with all of this. So we look at the risk reward ratios here, and high win rate strategies, win rate 60 to 80, high RR strategies. So all of this, how to use a journal, the metrics explained as well. So that's all in the calculator as well. Alright, so look, I hope you found this useful. This, I think, is something that really, when people are trying to make a living out of trading, trying to build up financial security for themselves, generate an income. If you don't know the numbers, you just end up getting there by default or just not getting there at all. And I am pretty sure that when these statistics come out from these trading providers like IG or many others, they say that anything between 70 to 85%, depending on what the company is, say that traders don't make any money. They just, because there's no consistency. You get winning trades, losing trades, but because there's no consistency, there's no pattern at all. And the only way that you can get from A to B is by having a plan. I hope you enjoyed the video. If you do need any help, you can book coaching calls where I can have a chat about where you're at. So these can be booked in here. Let's just close that down. Now, when it comes to the calculators, there is a suite of them, as you can see, with full training. And if you do want them, then you can just click on the link somewhere in the description or tagged in the comments in this video. So 2 choices really. You can carry on doing what you're doing, or if you feel that this is something that can help you, then try these out. I just do not do any trading without these calculators. I have to know the numbers. I have to have complete certainty to know what I need to do on a longer term basis, and then zoom all the way back into what I need to make in a month, what I need to make in a week, what I need to make per day, per trade. And this is the trading plan, the full financial plan, which I've gone through in this video. I've not gone through all of the calculators in full. What I wanted to do in this video is, in particular, is show you whether it's possible for you to grow a £10,000 account to $1 million. And I will do some more training to show how you can pass challenges to get live proprietary accounts, but how to blink and well hold on to them, because the amount of people that work hard to pass a challenge end up getting the live accounts, and then they lose them quickly because they just lose that focus and discipline, and they get themselves into an awful drawdown situation, which I call the quicksand effect. And that's why I built this drawdown calculator as well, because it just shows you how quickly you can get into drawdown and what the kind of things people do to try and get back to square one again. Aggressive recovery through doubling down, and it's just poor risk management, as I've said in here. Alright, if you did like the video, then please click the like button. You don't need to smash it as other people who create these videos say, please smash the like button. No, just like it, that's absolutely fine. And please leave a comment if you found this helpful. I hope you did. I enjoyed creating this video, but the main purpose to answer the question, is it possible to make £1 million from trading? And I hope I've answered that question. Alright, so you take care, happy trading,